So all of the talk now is that the Fed has won, that they have managed to tame inflation without major damage to the economy, without tanking the stock market. We have inflation well on its way back to 2%. I beg to differ. So the Fed already lost. They can't fix the damage they already did in the second half of 2020, in all of 2021, 2022, when price inflation for goods and services was through the roof. Yes, price inflation has slowed in 2023, but it still exists. Prices are still going up. So regardless of what the talking heads on Bloomberg and CNBC and other market commentators may think in the real economy, the Fed has caused a great deal of pain. And so just because price increases are less steep, or even if prices for all goods and services were to go flat tomorrow, the damage is already done. And that's why things are slowing in the economy. We have less in the way of economic stimulus. The employee retention credit that's expired. That expired late summer, September. We have the reprieve for student loans. That's over. So that stimulus is gone and shouldn't have been there to begin with. That's number one. The stimulus was the cause of the inflation. Anytime you print in that increase in the money supply is not directly tied to productivity, you're going to create slack in the economy. You're going to dilute the money supply, dilute the value of the dollar, and create price inflation. That's exactly what happened. So the fiscal side in the Fed caused the inflation, but the fiscal side's massive spending, and then the Fed subsidizing that spending by printing dollars. So the damage is done. And the best way to fix it, although it's going to be painful, is to cause deflation. That would be the best way to help Americans. And yes, it's going to hurt some Americans in the process. It's going to be painful medicine. With deflation comes job losses. You're going to have to shrink the economy. The Fed gradually shrinking the money supply, M2, M1, through quantitative tightening, isn't going to be enough to have an appreciable impact on decreasing the price of goods and services on an absolute basis. So we don't want to just slow the rate of growth in prices. We want to reverse price increases and have absolute price decreases for goods and services. And then things will become more affordable for Americans in terms of everyday expenses, as well as certain asset classes, frankly. Right now, the housing market is jammed, but we really haven't seen much in the way of price decreases. I know some markets have started to roll over. You could find that type of commentary out on YouTube and such. But in terms of the national average, it really hasn't rolled over in a meaningful way. So what should the Fed do? In my opinion, frankly, I'd like the Fed to just let the Fed funds rate float instead of artificially manipulating interest rates through the Fed funds rate. I wish they just wouldn't touch interest rates in that manner. To the extent the Fed should have an influence on the economy, I wish there would be far less interventionist. I wish that the Fed, frankly, would not exist. I would just rather have a bank like JP Morgan be appointed by Congress to help the economy, to help maintain stability in the economy in times of difficulty, and to define that, because that's the Fed's mandate, and the Fed has exercised massive overreach, especially since the bailouts of 2009. And quantitative easing, for those of you who don't know, or maybe younger viewers, quantitative easing, that program that the Fed instituted back in 2009, that was supposed to be a one-off. That was supposed to be for a period of a few weeks or several months, not from 2009 through May of 2022. That was not the intention. But as they say, there's nothing as permanent as a temporary government program. And so I would prefer that the Fed just exercise quantitative tightening. If there's too much slack in the economy, too much money, valuations get out of hand, prices get inflated, pull money out of the economy, just as the way they're doing. But instead of doing it at the margins, really do it. At quantitative easing's peak, the Fed was buying 120 billion of treasuries and mortgages each month, 90 billion of treasuries. Now, I think they just ran a number last week. I think the average has been about 50. So now they're letting approximately 50 billion of treasuries expire each month. So just about half on the tightening side as compared to what they did when they were loosening policy. So the Fed has not won. There's not going to be a soft landing scenario. The only way we would get a no landing, quote unquote, scenario would be if the Fed reinflated in conjunction with the fiscal side, and we had massive fiscal stimulus again, and the Fed printed to subsidize the debt funded stimulus. That would create a no landing scenario and kickstart growth again. But then you would just have massive growth in the treasury debt and massive price inflation again, which, by the way, the CPI is understated. Price inflation is a lot higher than what's in CPI. Hopefully that doesn't happen, but who knows what the Biden administration may try to push through next year in an election year. Perhaps the Biden administration will try to push through a stimulus package. And I'm not so sure that the Republican Party will push back on it, because they're not going to want to be seen as the bad guys, and they're not going to want to take the time to educate the public as to why stimulus is a bad idea. So I hope it doesn't happen, but I think its probability is about 50-50 right now. But I think the most likely scenario is that we will have a hard landing, and it's starting to play out now. I do think you're going to see long yields increase. The 10-year yield will increase. As things get weaker, that puts downward pressure on yields, but there's still a fair amount of treasury debt that needs to be issued over the next several months, and that's going to put upward pressure. So from here, I do see yields increasing a bit. They're not going to go to 10%. They're not going to go to 8%. They're probably not going to go to 7%, but I could see them well into the fives over the next several months. So don't believe what you're being told, that the Fed has won, that everything is wonderful. The Fed hasn't won. The damage they caused in conjunction with the Trump and Biden administrations and Congress printing all that money in 2021 and 2022, and their massive easing of monetary policy caused permanent damage. And to try to reverse some of that damage is also going to be painful and leave permanent scars. So we would be better off without these guys. That's all for now. See you next time.